Welcome back. Today, we will go through the impact of global economic slump on the Indian capital market. The global economic slump can have significant implications for the Indian capital market. When there is a slowdown or recession in the global economy, it can affect investor sentiment, foreign capital flows, corporate earnings, and overall market performance. Here are some key impacts that a global economic slump can have on the Indian capital market. 1. Investor sentiment and confidence. A global economic slump can dampen investor sentiment and erode market confidence. Uncertainty and fear surrounding global economic conditions can lead to a risk-off approach, with investors adopting a cautious stance and reducing their exposure to riskier assets, including Indian equities. 2. Foreign institutional investment (FII) flows. The Indian capital market heavily relies on foreign institutional investors (FIIs) for capital inflows. During a global economic slump, FIIs may adopt a risk-averse approach and reduce their exposure to emerging markets like India. This can result in capital outflows, putting downward pressure on stock prices and adversely affecting market liquidity. 3. Stock market volatility. Global economic slumps often lead to increased market volatility. Heightened uncertainty, negative sentiment, and rapid swings in global markets can trigger volatility in the Indian stock market. Elevated volatility can make it challenging for investors to make informed investment decisions and can lead to increased short-term price fluctuations. 4. Corporate earnings and business performance. A global economic slump can impact the earnings and business performance of Indian companies. Reduced global demand, disrupted supply chains, and adverse macroeconomic conditions can lead to lower revenues and profit margins for companies operating in export-oriented sectors. This can result in downward revisions of earnings forecasts and put pressure on stock prices. 5. Currency movements. A global economic slump can impact currency movements, particularly for emerging market currencies like the Indian rupee. During periods of economic uncertainty, investors tend to seek safe haven assets, which can lead to a flight to currencies such as the US dollar. Depreciation in the Indian rupee can affect the competitiveness of Indian exporters and can have implications for foreign debt servicing and import costs. 6. Policy response and market intervention. Governments and central banks often respond to global economic slumps with monetary and fiscal policy measures. In India, the Central Bank, Reserve Bank of India, and the government may implement policy measures such as interest rate cuts, liquidity injections, and fiscal stimulus to support the economy and stabilize the capital market. It is important to note that the impact of a global economic slump on the Indian capital market can vary depending on various factors, including the severity and duration of the slump, the strength of the Indian economy, policy responses, and global market dynamics. Additionally, the interconnectedness of the global economy means that developments in other major economies can have spillover effects on the Indian capital market. Thanks for watching. Don't forget to like, comment, and subscribe for upcoming interesting videos.